This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Huffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Huffman.
Well, good day, everybody, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is Wednesday, September the 14th, 2022. We're so glad you could join us. Coming up in today's show, I talk with Iowa Soybean Association President Robb Ewoldt. We also run down that ag weather outlook. But first, let's check those markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're at the end of another trading day for this Wednesday, and we're turning to Jim McCormick of agmarket.net. Jim, how did things shake out here today?
It was a mixed day today, Dustin. We had the corn and the wheat market the corn and the bean market under pressure most of the session, while the wheat market caught a little bit of a bid, plain and simple. The wheat is, kind of focusing on the weather, where it's hard to believe we're kind of back into a weather market, but with all the dryness in the western plains and the northern plains, people are very concerned about what kind of wheat acreage and, the wheat stands as we start ramping up that, the winter wheat seeding. So that's given the wheat market support. The grains, on the other hand, they're fearful of the potential train strike, which could limit the amount of grain moving around the country. That could also have a kind of an impact on end users getting stuff. But as for the agricultural side of the equation, think about how much ethanol gets produced and moved daily by rail, vegetable or bean oil, meal. So those industries cannot get that end product out. It may limit the amount of grain they can bring into the facility. So that could have a negative impact on the basis there. Then lastly, we're just moving into that time of year where the markets tend to feel a little bit heavy as harvest is starting to pick up across the country.
So we talked this morning about the rail situation, and obviously it's not something either side really wants to see happen because it can be a big problem, especially like you said, the end users down the line. I mean, ethanol and biofuels, for example, while they have grain storage, they don't usually have enough storage for the final product. That usually gets moved out right away, and they're not the only ones affected.
Well, exactly. I mean, a lot of people are in just-in-time kind of marketing right now. I mean, the auto industry probably has a couple days worth of inventory, but they don't have a lot of inventory, to keep these things going. I mean, there's one estimate that suggests that if you would shut down this rail industry for 24 hours, it could be a $2 billion hit to the U.S. economy. So there's a lot of political and economical pressure to get this deal done here in the next couple days. There's talk of Congress stepping in as well as the president stepping in. So I would say the odds are relatively high that we will have something done. If they would go on a strike, it'd be on a Friday. I'm guessing by Monday it would be done. The last time we did have a rail strike was back in the early 90s, and it lasted a whole 3 days because, the reality is the economic and political pressure are so immense, it forces the unions and the owners of the companies to come to an agreement.
All right, so switching to the livestock side of the equation, Jim, what did we see there today?
Not a whole lot of action going on right now. The cattle market, I think right now is struggling a little bit. The reality is we had a red hot producer price index number, the consumer pricing index yesterday were red hot. What that's telling us is the Fed is not done fighting inflation. They've been tapping the brakes to slow down this economy. The reality is the energy prices came down, but the consumers continue to spend. Jobs creation is still relatively strong, so job wage growth is there. So the fact is they're going to have to hit the brakes a little bit harder. And when they hit the brakes a little bit harder, the concern it is going to have a negative impact on consumer demand for beef, hence the cattle market kind of struggling. The pork market's finding a little bit of support. The reality is the futures are quite a bit of a discount right now to where the cash is. And the question is right now is with the supply of the market expected to tighten as we in the 2022 calendar into 2023, that should provide a little bit of support on the overall tightening of supply of the pork.
One thing you and I have talked a lot about during this year so far is the consumer indexes and consumer sentiment out there. We did see people still spending even when gas was higher. Now, I know you and I have traded pictures of gas prices, as in text messages, but we jumped 43 cents overnight Sunday night. I mean, I'm sure you guys are seeing a little bit of that as well. Are we still going to see that further tightening, you're thinking?
Well, The pricing right now, I mean, there's a couple interesting things going on in the industry right now. The crude oil market has been trending relatively lower as the market's been pricing in weak economic data out of China more than anything else. The Biden administration was rumored that they're going to, if crude oil gets below 80, they're going to start refilling the national reserves. And you got to think about it. Heck, that'd be a heck of a trade. Sell crude over 100, buy it back at 80. That would help the economic situation right there. But that seems to put a little bit of a floor in the place. But the reality is the consumer it's a very interesting situation where we are in the consumer. If you look at, the savings, Dustin, savings rates are in free fall because a lot of people, as their job wages are not offsetting the increase in food prices as inflation in general, they're bridging that gap by using their savings or using their credit card to essentially bridge it. That tends to be on the lower part of the income. But on the other part of the income spectrum, like American Express came out there earlier this week and said they'd seen no pullback in consumer spending at all at this point in time. So there's another group of consumers that continue to just, I call it, get back with life. After 2 years of living with COVID, they just want to go out and do things. And the higher prices is not backing off on that mentality. And that's really kind of to the frustration of the Fed. What the Fed really wants to see Americans do, or the world people do, is back off on the consumer spending to kind of back off on the demand for those products that are being sold. And that's not happening. So what's going to happen? They're going to have to raise interest rates. And essentially, the higher the interest rates go, eventually it will force people to change their spending habits. But that could have a negative impact on the economy. And hence, the people are worried about the so-called hard landing, where they raise the interest rates so high, so fast to cool off that consumer demand that they actually put us into a recession.
All right, Jim. Well, a lot of great information as always. If folks want to get in touch with agmarket.net, how do they do that?
Go to the webpage, agmarket.net, sign up for our research, or call any of the Ag Market team members at 844-424-6758.
All right, Jim. Well, thanks for the insight, and we'll talk to you again real soon.
Thank you for having me on. Have a good week of trading.
That again was Jim McCormick of agmarket.net. Let's take a look at those closing numbers. That's courtesy of the folks at Bar Chart. December corn was down 10.5 at 682 and a quarter. March down a dime at 687 and a quarter. November beans down 23 3/4 at 1455 even. January down 23 at 1461 even. Soy meal for October was 70 cents higher at 429.60. Soy oil down $1.79 at 67.14. Chicago wheat up 11 3/4 at 872 and a quarter. Spring wheat for Minneapolis up 8 cents at 939 and a quarter. Kansas wheat up 13 1/4 at 947. December oats down 3 1/2 at 398 1/2. December live cattle down 40 cents at 150.05. Feeder cattle up 52 cents at 179.97. October lean hogs down $1.05 at 94.70. Pork cutouts down $1.37 at 103.40. Class 3 milk down a nickel at 19.88. And that was our ag market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll hear from past president of the Iowa Soybean Association, Robb Ewoldt, as we talked to him last month at Farm Progress Show to talk about what was going on in the association. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, during the Farm Progress Show, I had the chance to talk with Iowa Soybean Association President Robb Ewoldt. We talked about the grant that the USDA gave to the Iowa Soybean Association, their work with some asphalt additives, and also the future of soybeans being grown here in this state. We're at the Iowa Soybean Association talking with the president, Robb Ewoldt. Robb, a busy day here so far for you guys at the first day of Farm Progress.
Oh, it's been a great day so far. We were fortunate enough to have Secretary Vilsack come over and talk to us about our recycled asphalt project here with high oleic oil. And we also got a great announcement from him earlier about ISA and soil and water outcomes being one of the beneficiaries of a grant, which is really big for the state of Iowa and our organization.
And tell us a little bit about what you're going to be able to do with this grant.
Well, we can expand conservation efforts and get money to the farmers to help get them on board to do some new farming practices that I think in the long run, I know they're going to improve yield, but two, they're going to make cleaner water, and we're going to save some of that carbon in that soil.
Are you seeing a bigger uptick in willingness from farmers to switch to some of these practices and with some of the results and what that could mean for the long term?
I think we are seeing it. If you can add some dollars, if we can add, through cover cropping too, if you can get a $5 off on your insurance premium, if you can get some partner and get some other money, these programs are benefiting the farmers. We are seeing farmers take advantage of those and add more acres into the program. Anytime when you're looking at break-evens come next year with fertilizer prices as high as they are and stuff like that, we got to look at different ways of farming and different ways of applying those nutrients. So maybe we can use less, but still produce the same amount. So that's kind of what these programs can help do.
And of course, as you mentioned, that asphalt, that's a big program. Just one of the many things you guys are working on to help find a bigger market for soybeans.
This asphalt project is what we do on the Iowa Soybean Association board. Is we fund those checkoff dollars and we find where to go, and we invested these dollars first into high oleic soybeans, and then when we had high oleic oil, we invested checkoff dollars into what you see here, to develop market development and to also improve infrastructure. We're killing two birds with one stone here with this recycled asphalt and high oleic soybean oil being used as one of the binders in it.
And how does that stack up against what they've been using in the past?
They tell me through the testing it's doing a lot better. It's really a good product. And they can also do it in a hot patch way also, which is kind of the asphalt we always see on the highways too. So it's kind of like a grade A asphalt versus the recycled. But 100% recycled, it's always good, I think.
Okay, and also this year, obviously Iowa's been a tale of two different climates almost. The east side of the state, which I believe you're from, you gotten your share of rain, maybe even sometimes too much. The west couldn't buy a drop if they wanted to. What are you hearing from farmers across the state either way on that?
Well, I think a lot of variability. I have a lot of friends across the state with this position that I hold, and we're talking every week, and it's tough in some areas. We're seeing some beans give up pretty quick. They were looking gray last week when I drove through some of these areas with the heat, and then where I'm at, I just kind of kept quiet the whole time because we've been blessed. There's no doubt we've been blessed for with our decent rains. Our rains over there made up for some of our sins at planting time because we might have hurried it a little bit in some wet ground, and thankfully we kept getting some rains to keep things going.
Well, that always helps. What other things do soybean growers in the state need to know, our viewers, our listeners, about what's coming forward with the work you guys are doing?
Well, we're doing a lot. Whether it's getting out and talking to our customers around the state, and those end users, trying to let them know where agriculture's at. We're promoting. We're going overseas. We're back to traveling now that COVID's kind of calmed down. So we're doing some trips, marketing trips, and trying to push that. We're always trying to come up with new uses like what we see here. It's a vast assortment. And what I would say to the Iowa soybean farmer is I'll give my little plug and say, come on out and see what we're doing. Come to these meetings. We're trying to talk profitability with fertilizer prices where they're at. We've sent letters to the White House trying to remove some tariffs on some fertilizer issues that we've had with Morocco. We're just doing a lot of things, it's always about improving the bottom line for the Iowa soybean farmer.
All right, well, Robb, I thank you so much for taking a few minutes to talk with us today.
Thank you very much.
That again was Robb Ewoldt, president of the Iowa Soybean Association. Let's run down that ag weather outlook. Well, it was a sunny day here in Des Moines, a little bit warmer, close to that 90-degree mark. Though even though the days have been a little bit warmer, they're not as miserable and oppressing as they are usually in August, but still a little warm side for September, especially after that preview of fall we got last weekend. But let's see what the National Weather Service has in store for the next 24 hours. So as we said before, it was pretty warm out there today. Not terribly bad, but warm enough for September. We saw mostly sunny skies across much of the state. Temps were mostly in the mid to upper 80s with the exception of the eastern side of the state near Clinton where they were still about 79. Now tonight we're going to see variably cloudy skies. Most of the state will be in the low to mid 60s. Of course, Clinton being the exception, coming in around 55. Then tomorrow, partly to mostly sunny across most of the state. Continued warm. We're going to see breezy conditions in the west, and our temperatures will be in the low to mid 80s. Looking at the affiliate weather map for tomorrow, Cherokee and Shenandoah both to be partly sunny and 85. Des Moines and Albia both coming in mostly sunny and 87. Waterloo mostly sunny and 85. Clinton will be mostly sunny, warming up to the 80s like the rest of us, coming in at 82. For more detailed forecasts in your area, tune to your local Iowa Agribusiness Radio Network affiliate. And that's been our Ag Weather Outlook. And that also brings us to the end of this edition of AMPM. You can find all our content online at iowaagnet.com. Also follow us on Facebook, Twitter, LinkedIn, Instagram, and on TikTok. You can also subscribe to us on YouTube, where you can find all of our past episodes of AMPM. You can also click that bell icon to get notified anytime we upload a video project. You can also sign up for our free twice daily market podcast, coming to you on Google, Amazon, Apple, Podbean, and Spotify. From the IRN studios in Des Moines, I'm Dustin Huffman. For Riley Smith and Mark Magnuson, we thank you for watching. This has been Ag Matters PM.